All right. Good afternoon. Welcome back. This is the last kind of session I'm going to do. Really, it was targeted toward you guys that spent the first couple of weeks with us here at 2021. And it's just kind of a follow-up to what we talked about last week. And to kind of talk a little bit more about my strategies, and that's I think is going to be key here. We talked about, let's see, last week I know we talked about the process. I kind of gave you some truths, things that we have to accept if we're going to be a trader. Share with you what my tools were, and we'll see a little bit more how I use them. If you were here for the last two swing sessions, you see how I use Finviz, but I'll give you a little bit more detailed explanation today. So before I get into that, I know I had the question that why are you scratching? If it's not the dogs, it's my cat that starts messing around whenever I start talking. So I was asked, why would I want to trade Facebook on an all-day hold versus just a regular day trade? I did both. I traded Facebook on a regular day trade. All right, we did that, and I also did the all-day hold, and I honestly did that on purpose with the reason of being able to show you guys what the difference would be. Okay, and you're looking at you're looking at Facebook here, and we saw yesterday it took a hit. It gapped up a little bit, but what was happening this morning, here we put in the high, it pulled back. We put in the high here, it kind of pulled back, and every time we made a lower high, so to speak, and we were just kind of rolling over. So once we were losing red to green or yesterday's close, I'm thinking, well, we're going to go red on the day. And whenever you see something like this, when you have a stock that's has a lot of negative news on it or a lot of positive news, if we're going to go long. In this case, it was a lot of negative news. It was, a lot of selling pressure that this stock has had for the last day or so. And there was no indication that it was going to pick up strength. There was nothing that you would think this thing would get strength from. So my thought was, this could be a good all-day hold. And we look for these. And basically an all-day hold is a swing trade that we hold throughout the day. We just set it and we walk away from it. All right, the one unique thing about this is I don't typically set a hard stop because I'm usually getting in pre-market. And I don't typically set a hard stop because the first 5 to 10 minutes, the first couple of candles can be really crazy. And they don't really give you the true direction. That first candle really doesn't give you the true direction that the stock's gonna trade that day. That's why we do the opening range. We kind of wait for that first 5-minute candle to print, and then we kind of look to see what's going on. So one thing that we have to do as part of our morning routine is we have to look at the stock. We have to zoom out. and look at what is everything telling me. Overall, what's this telling me? It's telling me that we're trending down. The 200, it never showed any signs of giving up or starting to turn around and go the other way. And everything about this was telling me there's a lot of selling pressure there. So it's worth the risk. There was a lot of room to the downside. It was worth the risk to take this trade. No doubt about it. It was worth the risk. All right, so here we've got there's a 5-minute opening range low. So this is what we have here. This was a 5-minute opening range. We get in on the low. It kind of bounced back a little bit. Finally, we got the move. We took profit, and then it turned right around and stopped us out. And then again, we're waiting for it to sell off, so I wait for it to take out the low again. And what does it do? It rips up and stops us out. And then it comes back in. There's still a ton of selling pressure here. So I get in. We make, I take it off here. And then, we try it again. We get in here and it doesn't really do anything. It sells off. And then it gets, this is the cover for here. I short, because it didn't really do anything. And all I was doing was just chasing my tail. This is what can happen when you start day trading something and the market's really choppy. Okay, this market was really choppy. The only good trending down move we had was right in here. And this is what can happen when you start day trading it and trying to catch the trend move down. Now here's another one right here. This was okay. But this is the frustration that I deal with. Now take a look at this all-day hold. And we're trading off of the all-day hold. We're looking at a 60-minute chart. All right, we're not trading off of a 5-minute chart, because just like in a swing trade, if you're looking at the intraday price action like this, you're gonna keep stopping yourself out. Okay, you're gonna keep stopping yourself out. You're gonna keep stopping yourself out. At the end of the day, you may end up with a couple of dollars, or you may end up red. I think this was red by a couple $100. Whereas if we take our time, just set it, let the trade work, and this was our final target, 250.25. It almost got there. The level here was 250.15. This was identified before I even took the trade. We need to have a profit target that makes sense for whatever we risk. If I'm going to risk $2 or $2.50 or even $3, I need to have $5 or $6 profit potential or more. Okay, this had $7. So excellent risk reward. Now you're gonna have to make sure you size in accordingly so that you could withstand the risk. But if you don't, it's gonna drive you crazy. So the technical level on this was gonna be the higher pre-market, which was this. So technically, if this candle closed above the higher pre-market, and then the next candle made a higher high, the trade is dead. All right, so that's the technical. Then you have your max loss, the maximum your amount you're able to risk, or that you're willing to risk on this one trade. So you have the technical level you base your trade off of, and then you have a max loss stop that should allow your trade to test that level without stopping you out. Too often, everybody puts their stop on the technical level, and if it goes up and hits the level, then it takes you out. The professional traders, the computer programs, the algorithms, they know where retail traders put their stop. They know because they can see all of the orders sitting there. So that's why I always advocate not putting your stop, on a particular level or whatever. You always want to have it outside of it so that it can actually test that level. Because if you get a pullback, if you get a bounce, you're gonna have people testing. They're not really searching for stops. They're searching for volatility. They may need to pick up more for their position. So they're going to move the market wherever they see a lot of orders sitting, so that they could position themselves and build a position that they want. So it's not always people specifically seeking your stops, because all of those orders may not be stop orders. There may just be orders for people that say, if the stock gets here, this is where I want to buy it, or I want to sell it. So it's just where volatility is, and it's typically around places of support or resistance. Historical support or resistance, which are daily pivots or moving averages or other indicators. You're going to have computer, the algorithms and all of that are basing their entries and exits. It could be based on a moving average, because they know people are going to be sitting there, and that's where they can find the liquidity they need to do what they want to do. So just kind of keep that in mind. But look at the 5-minute chart. If we look at this on the 5-minute chart, look how smooth this was. Look how choppy the candlesticks were. It doesn't look, it may look smooth, but you guys that were trading this, this wasn't smooth price action. It was chopping around. It was jumping up and down. It chopped its way down. So all of these big wicks, these are stress fractures that we deal with, all throughout the day. So on this trade, did I have to deal with all of that mess? I didn't have to deal with nothing. All I had to do was sit there and let the trade and just let it work and say, hey, it was either going to work or it's not. The only thing that pissed me off about this trade is when I took this off in the last minute, and then 5 seconds after I took it off, the bottom fell out and it retested the lows here. So if I had waited 10 seconds before I took this off right before the close, I would have made $200 more on this. That's the only thing that pissed me off about this trade. So I know I took 500 shares of this. I probably should have taken 300 to kind of show the same, where if I was day trading with 300, or I did this with 300 shares. But even with 300 shares, this would have been over $1,000 trade. This would have been about a $1,400 trade or something with just 300 shares. With 150 shares, you would have done about 750. You know, so it's all relative. You don't have to have big size in order to do it. Like if your max loss on this was $300 and you needed to give it $3 in order to, you know, make sure that it can test the technical level, then you needed to go in 100 shares. You know, it's just that simple. You know, if you needed to give it if you could only risk $300, the worst thing you could do is go in with 300 shares and try to give it $1 stop, because you would have been stopped out of this. Now, yeah, you could have gotten back in. Absolutely. There's always, most of the time when we get stopped out, there's always chances to re-enter. The key is we have to do it the right way. So, you know, not bad for just setting the trade and just letting it work. So what if let's see. So I'm going to look at this. What if we did an all-day hold on Chewy? Chewy is one of our swing trades. So what if we did an all-day hold on Chewy? You just set it and you walk away. Now, there are a lot of traders, and the reason why I'm sharing this with you right now, there are a lot of traders who will take our swing trade watch list and look to take all day holds. They'll look to swing the stock intraday. So it sets up, they set their stops, they set their profit targets intraday and let it run all day. And they come back right before the close, just like we did, and shut it down. Alright, so on days when I'm expecting choppiness, the only reason I expected choppiness today is because we're dealing with the same garbage that we dealt with yesterday. The same tensions. So I kind of expected the market to be choppy. Whether it was chopping up, chopping down, I felt it would be choppy. I didn't have a stop on earnings. So anything else is not going to give you solid moves all the time. So I anticipated it being choppy. On those choppy days, it's best to trade all day holds. Or if you can't hold it all day, just hold it until lunchtime. Or, you know, whatever. But you don't want to fight choppiness. You saw us fight choppiness this morning. It was so frustrating. And it's so easy to lose your cool and not stick to your stop once or twice and take a big dent out of your account, even if you don't blow up. So what you saw us do today, what you saw me do today, is trade through choppiness. Continue to take a base hit or a bunt, get stopped out, or the price action starts to do the wrong thing and we stop out. So, these are things that, we really, honestly and truly have to pay attention to. If the market's choppy, you probably don't want to day trade, because we went to hell and back just trying to make a couple $100. Whereas if I set it and just let it work, we'd have made over $1,000. So we have to, just because the market's open, again, we don't have to trade. There's no reason for us, to have to trade just because the market is open. Let's see, what was the last thing I want to show you? Does anybody have any questions so far? While I get my head screwed on straight. The day trading stuff I was doing was in TD Ameritrade. The all-day hold was in Speed Trader. But it doesn't really matter what broker. It's the execution of the strategy. It's gonna, as long as you execute, it doesn't matter what broker you trade. The focus has to be on executing the trade plan. Looking for another stock here. The one that, okay, here we go. Remember, we traded MRNA today. Right? We traded. No, you can't do that. Yeah, you're right. You can't do that. It's got to be, you can't day trade and then try to swing trade the same stock in the same broker, because they're going to just put the trade together. So yeah, if you're going to do one or the other, you got to, if you got two accounts, and most people will set up a swing account and a day trading account. Because in the swing account, you really don't have to have a whole lot of money. Honestly, I would say just put a little bit of money in it and practice swinging with a couple of shares. There's nothing wrong with you swinging 5 or 10 shares because you're learning, and you're trying to get your feet wet trading swing trades. So I always recommend doing that. You get a broker like TD Ameritrade where you can open up an account with $50. I mean, you can put a couple $100 in it and just trade a couple of shares on the stocks that we are trading, and you're going to learn. It's going to be really good. All right, here is a perfect example of today. MRNA. All right, remember we traded MRNA this morning. We tried an opening range breakout, which is let me change this. Which this was an opening range high, 5-minute opening range high. And it got in, it pushed up a little bit, and then it pulled back. let's see, what time was this? Does it have the time on here? Yeah, 9:35. This was the first one we took. Right after 9:35, we jumped on it. It ran up, and then it pulled back and stopped us out. And then it pulled all the way back, and here it broke again. But by the time it broke again, I was doing something else. But look at what it did over a period of time. We put in this top. You can see we were gearing up here. This is an ascending triangle. Basically, it put in. You know, and we talk about this in our continuation, in the continuation strategies. Our channel breaks are trend continuation. We're looking for the trend to continue in the direction that it was going after a pullback. And here we put in this triangle, and this was a mental error right here, or not a mental error. Trying to put in the range order, and actually just got stopped out immediately once the order went in. If you type in the wrong price, oftentimes if it's lower, it's gonna automatically fill. That's what happened here. And you know, it just took off, so I wasn't gonna chase it. And here we got up, and you know, there's another one. Just a chopped up mess today is what it is. It's just a chopped up mess. And you can see this was the initial top of the channel. And it wasn't until we got out of all this mess that this thing did pretty good. So the morning, oftentimes, the morning could be choppy. It could be a complete mess. We could trade like the biggest bag of odorless excrement you could even imagine. But later on in the day, if you go to lunch, you calm yourself down, you get a little bit calmer, you bring your patience in, and you can turn your day around. Now the morning is when the excitement is. It's when the volatility is there. The momentum is there. And a lot of people can't really handle it. I mean, there's a lot of times where I can't handle it. So you just slow it down, and then, you know, work your way back into the day. Now, if you come back after lunch and you're still amped up, you drank too many Red Bulls or something like that, then yeah, you need to shut it down. Because when you're doing this, you've got to be calm, cool, and collected. Okay, you can't be a hot mess. You cannot be a hot mess. So that's, you know, what I'm trying to reiterate to you guys every day is, look, number one, you don't have to trade every day. Number two, if you miss a trade, if you miss an entry, you miss an opening, just be patient. The market's going to give it to you again. If not on that stock, it'll be on another one. So just be patient. And if for some reason it doesn't give it to you that day, just be there for when it gives it to you the next day. But if you blow up today and you don't have any money to trade tomorrow, it's not going to be a good feeling. Oh yeah, I heard you. I try to be, just like everybody else. You're gonna have days where you don't get enough sleep. Like last week, I stayed up all night Wednesday, watching Congress. So I come in and I've only got, no more than 3 hours sleep. I think I might have got right at 3 hours sleep. And I didn't trade very well. I was surprised. But I know it's not sexy. I know it's not exciting. But I guarantee you, if you want a career in this industry, I guarantee you, you're gonna have to learn how to manage your mind, your emotions, how to use them to your advantage, how to, develop your discipline. A lot of these things do not fit with how we were brought up, how we were taught, how we were raised, because it's completely different. So it's one of these things where you're gonna have to bite the bullet, take your time, and learn all of this. Because I'm telling you, there's nothing wrong with making a couple $100 a day on average. You're gonna see last week what we did. We had one bad day, but making a couple $100 a day over those other 4 days, we ended up with over $1,000. We should do the same thing this year. This month, same thing this week. As long as we do what we're supposed to do, we don't start falling off the deep end. All right, so I'm going to bring up let's see. I'm going to bring up my scans here. Oh. Need to end the show. Alright, so there's only one scan. Well, I take that back. There's 3 scans. There are 3 scans that I use every morning. Only 3 that are my main watches. First and foremost, the earnings scan. I'm looking for stocks on earnings. Those are the ones that's going to give us the most. Those are the ones that's going to give us the most consistent moves, the best opportunity to make the most consistent moves, and that's going to have some follow through, because a lot of people watch stocks that report earnings, and so that's my first watch here. So I'm looking for those stocks that have gapped up or down over $1. This is the gap up. This is the gap down. I'm looking for them over $1 or under $1 at least. So if I don't see that, I'm passing over them. I'm also looking for them to have at least 50,000 shares traded that morning. So once I see those 2, then that's going to put them in play for me. So that's when I come up and I bring them up on the daily chart and the 5-minute chart. When I bring this up, when I'm vetting the stocks. So I'm able to see the daily chart. I'm able to mark the daily levels, the daily pivots that we use. And the reason why I like Thinkorswim is that these automatically populate on the 5 minute. I don't have to do double work like I do on DOS or anything. So it makes it simple for me. And I can easily look over here and see where are my windows of opportunity. I'm looking for windows of opportunity between the daily pivots. If it's too tight, if I have too much room in between, not a whole lot of room in between levels, then I'm going to leave it alone. If I have big windows, I'm going to have an idea of where this stock might go. Again, Microsoft looked just like Facebook, so to speak. We had a little gap up, but then it couldn't hold. And we started selling off, making lower highs, lower lows. So my initial thought, this could be a good trade to the short side. And look at what it did. 5 minute opening range low right here. This study automatically draws it. Unfortunately, it prints 5 minutes too late. But stocks that wait for about 5 or 10 minutes to break, this works perfectly. But we got this in, and a perfect 5 minute opening range breakdown. You could see I've got just over a 2-point window here, which is perfect for me. This is just what I like to do. So this is a prime example. But just to go back through, I'm going to find it here, and then I bring this up, and I'll go through, see what kind of windows of opportunity I have. If it's tradable, then I write it down, and I got it. Now, the other scan I look at, like if there's nothing over here, like this morning, we really didn't have anything over here on earnings. So I go over to the ORB pre-market scan. And what this is looking for are stocks that are over 15 bucks, that have at least 50,000 shares of volume traded pre-market. The float, I don't know why this thing I have to keep resetting the float. It should be over 50 million. But every now and then it just comes back and I get lower float stocks. I don't like to trade stocks with a float less than 50 million. Also, I'm looking for ATR. If the average true range is less than $1, I don't even mess with it. So I'm looking at that on this scan. And once it's on here and it's not on earnings, so I don't know what the news is on it, that's when I go to Finviz. And what Finviz has is so since I've got MST up, MSFT, I'll type in, and most of the news is gonna be here. Every now and then It won't have all of the news, but most of the time, all of the news is going to be here for that day. This is just chatter. So sometimes it's good to see what other people are just saying. Some of these people don't have a clue about what the hell's going on. They're just typing stuff. But every now and then you may find a news article that's not over here that you can go to and help you out. Also, analysts, whether it's an analyst upgrade or downgrade, what it is, what the price targets are. A lot of information really quickly. And you don't have to have an the subscription. The free use, you can get all the information you need. I got it, Finviz Elite because I do this for a living. And the tools that I use are just the cost of doing business. Alright, so this is how I use Finviz. And if you come in every Sunday for the market analysis and the swing session, you see how I use this to screen my stocks. Again, you don't have to have a paid subscription to use the screener. So, you really don't have to pay for it to just get the basic information that you need. And so I take that watch list and I use it the whole day. I'm going to watch those stocks all day long. So on our watch list today, we had MRNA, and I'm gonna go to the 5-minute, and you can see the stock was 100% tradable. We traded it. We made some money off of it, but you can see it 100% tradable. We just had to wait, be patient. Facebook, same thing, 100% tradable. This stock was in play today. SQ, same thing. We were able to. I don't think SQ was as in play today as it was. This was the low. This was the high. Yeah, I didn't take any trades on SQ. I don't believe, or did I? Did I take a trade on SQ? If I did, it was early. It was an opening trade. If I did take a trade on SQ. Yeah, I did. I did take a trade. Alright, so this practically stayed within its channel all day. Because here was, see right here was the opening range low. And right here was the opening range high. And look, it stayed inside that window all day. This is when a stock is inside here, I don't mess with it. Don't trade it at all. It's only when it comes outside of that and I start looking at the windows of opportunity, I start looking at the channels it put in, and then I go from there. Man, if I didn't have a class today, I would have made a ton of money on plug aftermarket. We'd have made a ton of money on plug. What was the other one on watch? I had Walmart on watch because this one was active aftermarket yesterday, but you can see it didn't really do much. It didn't really do a damn thing. So Walmart and SQ out of our watch list today never really materialized. and ZS was the other one that was on our watch. It did make a little move. It didn't make a big breakout move. But here you've got the low and the high. It did make a little opening range break before it pulled back. And then it just kind of grinded its way up a couple bucks. You know, before it kind of started running out of steam here. So it's not all of the stocks will have volatility all day, but you're going to have one or two that usually does. And if I don't have any stocks, like if all of them run out of volatility and all of them are kind of trading in the range and not really making a move, then I've got, once the market opens, I've got my reversal scanner. I start looking for reversals. And these are stocks that make extreme moves to the long side or the short side, and I'm looking to take the trend reversal. But that's rare. That used to be my favorite strategy. I used to love it to death. But now, you know, the trend continuation, I love it. That's my bread and butter. That's where I make money. So that's that. So hopefully over these last 2 weeks, you've got a really good idea of how I operate, what the focus needs to be every day in order to make money consistently. Because what happens, anybody can make a big winning trade at any time. You really don't need skill for that. You just need to know how to click the button, click the mouse. But can you do that consistently every day? That's the question. That's the question you got to ask yourself. Can you consistently make trades every day? And you're not going to make a home run every day. You're not. So in between those home runs, can you put together some consistent days where you're not giving back the money you made from your home run? Now, I can't tell you how many times I had traders leave because they weren't happy making a couple $100 a day. They wanted to make more. They see people on Twitter and on Facebook and Instagram, wherever, posting they're making all this money and they've only been trading a couple of days or a couple of weeks. And they come back and they've made all this money. But in a couple of weeks, I don't hear from them. I reach out, and if they are bold, if they have the courage to answer me back, they've lost it all. Some of them have blown their whole account. So it's all about figuring out what you have to do to be consistent, and it's managing your emotions, using them to your advantage, and focusing on executing your trade plan, without fail. Developing that trader's mindset. That's what it's all about. All right. Does anybody have any questions? Oh my God. What's up? You're going to have to post this stuff in off topic. Because if somebody posts something, I'll never see it. Does anybody have any questions? I know several of you guys are having to watch this because you're not here. You can't be here for the live session. So you guys just email me your questions that you might have, and we will go through it. So I think I covered everything. But if I didn't cover something that you need to know, that you want to know, the floor is yours. All right, so what I'm gonna do is I'm gonna stop the recording so I can get it uploaded. But just go ahead. If you have any questions, I am here, still here.